Welcome back, everyone. Welcome back to Current Economy and Investment Insights. Today is September 8th, 2020. I'm Ron Jankowski with Channel 4 and PL Insights, and my co-host here is Paul Munico from Ameriprise Financial. And Paul is going to give us an update as to what took place last week. Lots of activity, Paul.
A lot of volatility in the market last week, and I know you've got some updates on some current news to watch out for this week. And I'm going to start out the show by giving some updates on the unemployment rate. So I'm going to go ahead and begin. Non-farm payrolls did grow by 1.37 million in August, and that was according to Friday's employment report. It was no doubt a very strong gain, but it was also the smallest gain since employment started its recovery back in May. The unemployment rate, meanwhile, dropped almost 2 full percentage points from 10.2% in July to 8.4% in August, the second largest decline of the recovery. The gain in non-farm payrolls was generally in line with forecasters' expectations, yet the drop in unemployment rate was significantly larger than expected. Largely accounting for the large unemployment rate decline was the fact that employment as measured by the household survey, that's from which the unemployment rate is derived, was much larger than reported via the non-farm payrolls number, which is a function of the establishment survey. The Labor Department's household survey for August showed a gain of 3.76 million jobs in the month, more than 2.5 times of the establishment survey. Household survey results are more volatile than those of the establishment survey due to a higher statistical error. However, total employment as measured by the household measure is always higher than the establishment, as it does a much better job of capturing the self-employed, contracted workers, and the quote-unquote gig workers. According to the establishment survey, the economy has regenerated approximately 48% of the jobs lost in March and April, while the household survey shows 55% of the jobs lost over the period have been regained. So definitely some different surveys, some different reports there, giving some conflicting numbers. Regardless, the consensus is we are starting to put more people back to work, and hopefully that aids the economy moving forward, and hopefully we continue to put more people back to work.
Good news. Excuse me. And Ameriprise Financial had also shared some additional information that is taking place exactly today. In fact, the U.S. equities are weaker this morning as the sell-off in technology and momentum stocks continues. And the stocks in Europe are off by more than 1%, while benchmarks in China and Japan ended Tuesday higher. So
yeah, we saw our markets decline last week. There was a tech sell-off somewhat on Friday, which brought the major markets down. And by what you're reporting this morning, it seems like we're due for another down day in the market on Tuesday. And European markets, again, we're a global economy, so if we're in a bit of a sell-off, potentially they may be selling off as well.
And WTI crude is off 5% this morning, falling below $38 a barrel for the first time since late June on fuel demand concerns.
That's a big drop in crude.
I was just going to say that, yeah.
Yeah, and the concerns are still there. I mean, we're not flying to the rates that we were flying before.
Right.
Even just people every day driving. We've got people working from home, kids staying home from school. We're just not consuming as much fuel as we did before the pandemic. Hopefully all that stuff returns once the pandemic is over, and crude may regulate by then. But as of now, as you reported, it's on the decline.
Yeah, transportation is definitely down.
Yep.
A piece of interesting news about Tesla. Tesla shares are sharply lowered this morning, trading at after the automaker was not added to the S&P 500 index in a quarterly rebalancing on Friday after close. That's an interesting change.
Some people are seeing that as a bit of a snub for Tesla that they didn't be included in the S&P 500. Tesla has been an often talked about stock. They've had a tremendous run up in the last year, and especially this year. So
It's
that's
been
one.
V.
You just
up and
watch,
down, up and
turn
down.
any news channel on, and you'll probably hear something about Tesla lately. So
Yeah.
that's just more fuel for it.
Right. And speaking of the S&P 500, the year-to-date percentage is actually up 7%. And the year-to-date for the Dow Jones is 0.27.
Finally got it positive. Yep.
Yeah. And the NASDAQ is up plus 26%. So that's what we have for today, Paul, unless you had anything else you want to add with all this turmoil going on.
Yeah, I mean, those numbers are as of Friday's market close. As you reported, we're looking for Tuesday to be a volatile day. Could potentially be a down day, so those numbers might look much different when we do the show next week.
Interesting to see what happens. Stay with us. We're going to be right back with our show on Your Money. Paul has got some interesting things to talk about a first home purchase. Stay with us. We'll be right back. Thanks for staying with us. We're back, as I had mentioned, with a show called Your Money, and Paul Munichel with Ameriprise is going to be talking about 5 tips for purchasing your first home. Let's listen to what he has to say.
Yeah, and this is a bit of a timely topic because interest rates have been so low, making housing a bit more affordable. And with the stay at home due to COVID, people are looking for homes with offices now, and there's some people looking to migrate out of a congested city. So there's a lot of movement in the housing market. So I think this is a timely topic. So let's go ahead and begin.
Let her go.
Okay, as I mentioned, low interest rates and the desire for more space as COVID-19 leads people to spend more time at home. They're boosting demand for home ownership. According to the National Association of Realtors, home sales jumped a record 20.7% in June, over a third of which came from first-time home buyers. Now, if you're one of those people looking to purchase your first home, here are some tips that we're going to go over to help you get your finances in order. Tip number 1, determine if your down payment and monthly housing cost is appropriate. Traditionally, lenders have preferred a down payment of at least 20%. Now, if 20% or more is possible for your situation, it can be advantageous as you'll likely reduce the interest you'll pay and avoid private mortgage insurance, otherwise known as PMI, attached to low down payment lenders. However, if a large down payment is not suitable for your situation, there are many low down payment options available nowadays, especially for a first-time buyer, including Federal Housing Administration loans and conventional loans. But be aware that a lower down payment usually means you'll pay a higher interest rate. You can determine your monthly housing cost by adding the cost of your mortgage payment, taxes, and homeowner's insurance. You'll want to look at the monthly housing cost before purchasing a home to make sure that it fits into your overall budget. Step 2, get prepared for a home loan. With pre-approval in hand from a reputable mortgage company, your offer has a better chance of being accepted. Plus, you'll be able to shorten the closing period since the loan approval process has been completed. Keep in mind that getting pre-qualified for a loan is not the same as obtaining pre-approval. Pre-qualification is merely an estimate of how much you may be eligible to borrow based on self-reported income information. It is not a guarantee that you will receive the loan. You are still required to undergo an approval process. Step 3, approach fixer-uppers with caution. Unless you are confident the house you are buying has been deeply discounted based on the current housing prices in your area, you may place yourself at a greater financial risk if your new home requires a lot of work. Be realistic about what you can afford in terms of fix-ups. If you have the time and the know-how to retile a bathroom, for example, paint the living room, or enhance the landscaping, a moderate fixer-upper could be worth the financial investment. Otherwise, to avoid overextending yourself, you may want to look for a home that is in good shape and will stay that way for the foreseeable future. Point number 4, limit your demands. If you want to make a compelling offer, particularly in a strong real estate market, you may want to be selective about the conditions you're adding to your offer. An inspection contingency is smart, but asking for extensive repairs may tip the scales in favor of another buyer who is less demanding. And the 5th point for today, do your research so you're ready to act. Buying a home can be a very emotional decision, and it's important to go into the process well prepared. Take some time to lay out your priorities and research the market. What's most important to you in the long term? Resale value, location, school district, number of bedrooms. Be practical about what you can truly afford and take the time to obtain pre-approval from your bank or mortgage company. When you start looking seriously, you may have to act fast if you find the perfect house for you. If you're prepared in advance and thoughtful at the beginning of the process, you'll be in a better position to make the right move when the time has come.
Interesting. Excuse me. Interesting, but those are interesting because those are very, very responsible things that you should be doing.
Absolutely. I mean, it is an emotional decision. The market is moving a little faster than it had been moving. So pre-approval, pre-planning, I mean, simple concepts that everyone probably is already aware of. You can't plan enough in advance for something like this.
And if you're in the market for a certain price home, they move fast. So being pre-approved and your planning has to be all in place because you need to execute that offer and have to do it quickly.
It sure seems that way, and I bet every one of us that's a homeowner probably either knows or ourselves have lost that perfect house because we just weren't ready for it yet. Pre-approval and pre-planning will help you potentially not be losing that dream house if it comes up.
Excellent. Thanks, Paul, for this topic. For Paul Munico with Ameriprise Financial and myself, Ron Jankowski, we wish you good investment day.